There's something that I wanted to discuss, which I thought was more common knowledge than I guess it is, but it's kind of been a recurring theme for me for the last like week or two, and I've heard it come up a number of times, and so it's probably worth the discussion. So in the private lending industry, there is something known as Dutch versus non-Dutch interest. And again, like I said, I thought this was fairly commonplace, but as I'm speaking to a lot of lenders, and admittedly, they probably are on the newer side of the spectrum. That's okay. But I kind of throw around this vernacular all the time, and people are like, I have no idea what you're talking about. So let's talk about it. So in the private lending world, there's really two interest type methodologies, and it's Dutch versus non-Dutch. And really all this means is if you are charging Dutch interest, all this means is you are going to have your borrowers pay interest on both the principal loan amount and any construction draws that you're holding back, whether or not those have actually been funded. So, for example, let's say we have a $100,000 total loan amount, $20,000 of that is construction holdback. And so $80,000 of that will be given to the borrower for the purchase of the property when the property closes with title. The problem, though, is you can charge interest based on the construction that you're holding back or not. And so are you charging interest on just 80,000 or are you charging interest on 100,000? And it does matter because whether you do Dutch or non-Dutch, it's going to affect the monthly payments. So let's say, for example, let's say we do non-Dutch, which means they would only pay interest on the $80,000 and not the 20 until it's drawn. Once it's drawn, of course, they still will pay interest on it until they, max out their construction holdback, and then they'll just pay interest on the full 100,000 regardless. And so it's not really that big of a deal because they would pay, just simple numbers. They'd pay $800 a month until they start taking that draw. And then let's say they take, $10,000 in draws. Now their 80,000 is up to 90,000, and so they'll pay $900 a month in interest. Now, we work with a lot of lenders and we talk to a lot of lenders all the time. And the overwhelming majority, myself included, choose to do Dutch interest. And the reason for this primarily is that if I am going to take all of this capital and I'm going to set it aside for a borrower, that money, for the most part, has to be sitting there waiting for them whenever they're ready to submit those draw requests, and we have to reimburse them. And so the thing is, if I cannot give those funds to any other borrower and earn interest on it, the borrower sure as hell is going to pay interest on those funds while they're sitting there in escrow. And so it was interesting to me because I've had 4 different lenders within the last 2 weeks, which is kind of why there's this recurring theme. I've had 4 different lenders in the last 2 weeks that either A, didn't know what that was, or B, didn't realize that Dutch was the most popular in the private lending industry. And so I would encourage you to use Dutch because A, it just makes things way easier. Inside of Lender, for example, you can still choose, Dutch or non-Dutch. The system does it all. It handles it for you. It's not that big a deal. But honestly, I don't see a lot of borrowers that know the difference. And so if you'd say, yeah, it's $100,000 loan amount or $100,000 loan amount, your monthly payment will be $1,000 a month. And they'll be like, cool, sounds good. But the smarter borrowers or the more savvy borrowers, they've probably been around the block a couple of times and they understand, well, no, I could pay less in interest if I were to just do non-Dutch instead. And so do you offer that? The other thing to remember too is Dutch is very common in the private lending world and industry, but more traditional banks, so like if you go to just a bank or a credit union to go get a construction loan, they are going to do it non-Dutch. Say you are going to go buy or build a brand new house. Your principal balance on that line is going to be $0. And so as you do the foundation and the framing and the electrical and roof and all that other stuff, it will slowly step up over time and your monthly payment will also increase as well. And so that's probably where the confusion comes from oftentimes, is that borrowers may or may not have had experience with like a construction loan from a traditional bank or credit union. And so they expect it to be that same way in the private lending industry as well, which obviously is just not the case because of the reason that I mentioned earlier. The other thing to mention, and one thing that I really like, is on top of charging Dutch, I also like it because I get to make a little bit higher of a spread. So going back to our simple example of $100,000 loan, 20 in construction, 80 on the initial disbursement, the 20,000 I put in my trust account and it just sits there in escrow until the borrower submit a draw request and I approve it. The nice thing though is, like I said, I charge Dutch, and so they're paying interest on all of that held back funds at a 14% interest rate. But on top of that, I throw that in my escrow or my trust account is in a high yield savings account. And so it used to be as high as 4%. I think I'm right now hovering around like 3.5%. But in addition to the 14%, I also make 3.5% on the $20,000. Now, granted, it's not that much because they're going to start taking draws pretty soon after that. And so it'll go down to 15,000 and then 10,000 and then 5,000 in escrow. But, over the life of a loan across multiple loans, it can add up pretty quickly. And most often, for example, like we did a ground up construction a couple months ago. It was really cool. A guy was building a barn dominium. It was a $350,000 loan amount. And like I said, it started at zero and then they would just draw on that over time. And so it's not just $20,000 sitting in escrow holdback. It was $350,000 sitting in escrow holdback. So it's fairly substantial once you get 3, 4, 5, 6 loans that all have a construction holdback simultaneously, which is really nice. Now, the inverse of that is also true, and I'll use it as kind of like a negotiation tactic if I ever have a little bit more of a savvy borrower. So let's say I have a borrower and they come to me and say, oh, well, like we really would prefer to not pay interest on the funds that haven't been dispersed. This is my script. This is what I usually just kind of automatically go into, and it seems to have worked well for me. What I tell them is, totally get it. I understand where you're coming from, but keep in mind that we are a private lender, meaning we don't have all this institutional backed capital. All of the funds that we are giving you or providing you for your renovation or your construction or whatever is privately held capital from private investors that I can literally pick up on the phone and call. And so I still have my obligations to investors. Like I have to pay them their interest. But what I can do is, I'll tell you this, as soon as you start drawing on that line, it's not going to make a difference, right? Because you're going to start taking draws very quickly. And so in the grand scheme of things, let's say you've got this $20,000 that's just sitting there that, yeah, you are paying interest on, but within 6 weeks, you're going to take your first draw and it'll be $10,000. And then within another 6 weeks, you're going to take another draw. And then you'll be fully distributed of your construction holdback. And so in the long run, like maybe you are paying an extra $1,000 in interest. Really. I mean, it's not that big of a deal. And really, you're kind of just paying for the convenience of not having to go through a crazy credit check and submit your bank statements and do an appraisal and all this insane underwriting. Like, it's just, unfortunately, there's a cost of business. Obviously, that's kind of what I use, and that's my spiel that I go into, but it has seemed to work very well. And borrowers, for the most part, are like, okay, yeah, I get it. I get way more pushback on our points and our interest rate than I do on the Dutch versus non-Dutch, methodology of calculating interest. So if you are a private lender and you either A, didn't know the difference or are currently doing non-Dutch, like I said, the overwhelming majority of the people that are using our lender platform are using Dutch. And I really like that quote, right? Because I can see the trends and the metrics and the data from all of the private lenders or a lot of private lenders across the country. And I can see what is the most common and what do most people do and what's conforming. And on top of that, it'll make you probably a few $1,000s extra over the life of a loan, depending on how the size of the loan. And so it's substantial and it makes a significant difference. I would also push back against the notion of some people who say, well, my borrowers just won't go for that. I disagree with that. I think maybe your current borrowers may push back on that or they won't like that, but that's not to say you can't get new borrowers. And oftentimes I think we're kind of like, myself included, right? We get stuck in our ways, we get set in our ways of like, this is how we've always done it and this is how I'm going to do it. And I had a very similar experience when I switched from, and you may know this if you listen to a couple podcast episodes in the past, but we used to not charge monthly interest payments. And now I'm a huge proponent of charging monthly interest payments because money now is way better than money later. And I was just coming from, frankly, I was just coming from the flipping world where I was the borrower and I loved not having to make monthly interest payments. And so I loved having it all deferred and paid off until the back end. And so when I started lending, I did the same thing. And I was like, oh, this will be a piece of cake, right? I don't even have to worry about monthly payments. I don't have to worry about chasing after these guys. I'll just make sure that the collateral is there and then they'll just pay it all off on the back end. And it's easier for the borrower because then they don't see it and it's not as scary, all that kind of stuff. No, I completely disagree with that now. And I wish I could go back in time and slap myself across the face because No, it's not the way it works. And when you are the lender, you call the shots, and you don't have to deal with this like negotiation back and forth with your borrowers. And if you do, and you've kind of set this standard with your existing borrowers, I would give them some runway. I would call them all up and be like, hey, FYI, 6 months from now, we're changing things, but I just want to give you enough of a heads up that any future like new loans or starting January 1st when you come to us, this is going to be the new way of doing it. And I understand if that's not exactly what you were hoping for, or if that kind of makes it so that we can't do as many deals together. I totally get it, but we have this obligation to our investors, yada, yada, and you can go and explain all the different reasoning. In my experience, we have not lost very many, if any, borrowers. I can think of maybe one borrower that we may have lost because of switching up our, the way that we do things with charging the interest and the monthly payments versus deferred, or Dutch versus non-Dutch. Obviously, if you're just starting out, I would say start with Dutch, because then you just set the precedent and you don't have to worry about it at all in the future. So anyway, I hope that's helpful. Like I said, it seems to have been kind of a recurring common theme that has come up regularly over the last couple of weeks. And I thought it was more well known in the industry. And maybe it's not that it's not well known. It's just that terminology, the Dutch versus non-Dutch, is confusing, and people just, it's, you hear it for the first time and you're like, I don't know what that means or what you're talking about. So anyway, charge Dutch interest, you'll make more money, and I promise it's not that scary to your borrowers. So that's it for this week's episode. Thanks for listening. We'll talk to you soon.